Hello and welcome back to another episode of the Financial Freedom Show. In this episode, we're going to review my portfolio performance so far this week, as well as find out whether or not VYM is a good dividend ETF. Without further ado, let's get into today's video. So as you can see, my portfolio is up slightly this morning with the market open. I am going to do a deposit later this week into SCHD. That should be about $1,000, a little bit over. That's going to be around Wednesday this week, and then I'll try to do another portfolio update on Saturday this week. So I look forward to that. This morning so far, my portfolio is up about $100 from yesterday. That could change quickly as this market is pretty volatile currently. But I will continue to keep you guys posted, whether it's good or bad. I'll be completely transparent on this channel of my portfolio performance, and I have a very long-term perspective. So even if the market does go back down, I am going to continue buying, and I will not change my investment perspective, especially since I am in what I believe to be quality ETFs, one of which is a covered call ETF, and the other one is SCHD, which is the dividend ETF, which I really believe will outperform the market in the near-term future. Without further delay, let's get into my review of VYM, which is Vanguard's high-yield dividend ETF. So VYM is a dividend ETF that holds stocks that have high dividend yield. It's going to try to filter out the bad performing companies and only keep good ones that have higher dividend yields. So let's get into the overview of VYM. It seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks and companies characterized by high dividend yields. It provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields, and it follows a passively managed full replication approach. So this is a very passively managed ETF. Basically, it runs off of an algorithm. It's going to select stocks based on their dividend yield as well as their past performance. The expense ratio is currently sitting at 0.06, which is really cheap. That is a very good benefit of this ETF, is that it's a cheap Vanguard ETF. The performance year to date is about 1.23%. That is outperforming the S&P 500 as well as SCHD and even JEPI. This return is really good for the market that we've been having with the S&P down over 20%. As you can see, since inception, this ETF has returned 248% to its investors. Currently, VYM holds 443 stocks in its portfolio. The median market cap of those stocks is $120.6 billion. And the earnings growth rate of those stocks is on average about 11.1%. The PE ratio of the fund is currently at 12.7 times earnings, and the return on equity is about 15.2%, and the fund's total net assets are $53.6 billion. If we scroll down, we can see their weighted exposure. Their highest weighting is basic materials, then consumer discretionary, consumer staples, energy, financials, healthcare, industrials, technology, telecommunications, and utilities. If we look at their holdings, their largest holding at 3.4% of the fund is Johnson & Johnson, followed by ExxonMobil, then JP Morgan, Procter & Gamble, Home Depot, Chevron, Eli Lilly & Co., Pfizer, AbbVie, and Pepsi. They have pretty decently mature companies in their portfolio that pay out a relatively high dividend rate. If we look at their past dividend history, it looks like their dividend is a quarterly payout, and it looks like it is up and down, fluctuating quite a bit. It's a relatively large swing from 74 cents to 93 cents to 66 cents a share within a relatively short time frame. The dividend seems to fluctuate with the market. If the market goes down, it looks like the dividend goes down. And then once it goes back up, the dividend increases. Let's take a look at the fund management section on their website. Stocks included in the high dividend yield index have a history of paying above average dividends. The fund will hold all stocks in the index in approximately the same weightings as in the index. The experience and stability of Vanguard's equity index group have permitted continuous refinement of techniques for reducing tracking error. The group uses proprietary software to implement trading decisions that accommodate cash flow and maintain close correlation with index characteristics. Vanguard's refined indexing process, combined with low management fees and efficient trading, has provided tight tracking of net expenses. So the Vanguard Group was launched in 1975 in Melbourne, Pennsylvania, and is one of the world's largest equity and fixed income managers. As Chief Investment Officer, Gregory Davis oversees Vanguard's equity index, quantitative equity, and fixed income groups. The equity group manages index equity portfolios covering U.S. and international markets. It has developed sophisticated portfolio construction methodologies and efficient trading strategies that seek to deliver returns that are highly correlated with target portfolio benchmarks. This group has advised Vanguard High Dividend Yield ETF since 2006. Basically, it currently has the same management team that it had since its inception in 2006. The same team that provided that over 200% return. So it currently has a relatively good management group. That is definitely a bonus with this ETF. VYM currently sits at $110.24 per share. And that is the market price as of 11/11/2022. The risk reward scale on the Vanguard website says that this fund has a 4 out of 5. So it's a relatively more risky ETF compared to, say, VOO or other S&P 500 portfolios. The higher dividend yield brings some risk that these companies might go out of business because they don't have anywhere else to put their cash flow except back into their dividend. So that's definitely something to consider with this fund. The fact that they focus mainly on the dividend performance as opposed to the overall value increase underlying of the company that they're investing in. That is kind of one of the reasons why I decided not to include this in my portfolio. If we compare VYM to SCHD's dividend ETF, they have the exact same expense ratio. VYM has a little bit more assets under management, and the number of holdings is 4 times greater with VYM, so you're highly diversified compared to SCHD. But that also leads to outperformance by SCHD since it is less diversified. It's more focused on the companies that are growing as opposed to VYM, which is why the outperformance is here. You can see SCHD is in purple, VYM is in orange, and the S&P 500 is in blue. This chart is old. It's not up to date. It's just through the year 2020, what the performance was of each of these indexes in a bull market. As the market went up, it looks like SCHD and S&P 500 outperformed VYM. But VYM is probably a good option if you're in a bear market. As you can see, it looks like in 2020, it was relatively close to the S&P 500 and SCHD, and with the dividend yield, it probably outperformed both of those indexes as the market dropped. So VYM definitely has its benefits and its shortfalls. I decided not to include it in my portfolio just because it's more diversified. I want to have a more concentrated portfolio on stocks that are more likely to succeed. If you're looking for a safer option than SCHD, VYM might be something to consider as it's more diversified in 400 holdings as opposed to SCHD's 100 holdings. It has a relatively similar dividend yield, but I am looking to continue adding to SCHD as I believe it's a better option for me. That is totally your decision on which fund that you want to choose. I'm just presenting all the facts about each fund and letting you guys know where each fund stands in their holdings as well as their overall performance. So if you could, please leave a like on this video and a comment down below what you think about VYM, the Dividend ETF, and let me know what you guys are choosing to add to your portfolio. I like to see in the comments what you guys think. I will continue to keep you posted on my portfolio performance in the next coming weeks. Whether it's good or bad, I will continue to provide you guys with open transparency and show you how I'm doing. So if you enjoyed this video, please be sure to give it a like and leave a comment. Thanks for watching, and I'll see you next time.